Hello guys, welcome back to my channel. In the last video we talked about what is Ethereum. So today we are going to talk about what is digital money. Digital money refers to any means of payment that exists in a purely electronic form. Digital money is not physically tangible like a dollar bill or a coin. It is accounted by and transferred using online systems. One well-known form of digital money is the cryptocurrency Bitcoin, and also represent fiat currencies such as dollar or euros. Digital money is exchanged using technologies such as smartphones, credit cards, and online cryptocurrency exchanges. In some cases, it can be converted into physical cash through the use of an ATM. Understanding digital money. A variant of digital money is already present in society today in the form of cash held in online bank accounts. This cash can be sent or received from them. It can also be used for online transactions. Digital money is similar in concept and use to its cash counterpart in that it can be a unit of account and a medium of daily transactions, but it's not cash. For example, the dollars in your online bank account are not digitally money because they take a physical form when you withdraw them from an ATM. Digital money is transferred in cryptocurrencies. Digital money is different from cash because it improves upon the process for monetary transactions. For example, the technical rails of digital money can make currency transfers across border easier and faster as compared to standard money. This form of money also streamlines this process for monetary policy implements for central banks. The use of cryptography in some forms of digital money makes transactions involving them tamper-proof and censorship-resistant, meaning they cannot be controlled by governments or private agencies. Given these advantages, digital money has become priority for several governments around the world. The Central Bank of Sweden, a country that is on its way to becoming a cashless society, has released several exploratory papers since 2017 that explore the benefits and drawbacks of introducing digital money into its economy. Meanwhile, China has already conducted pilot tests involving the DC and EP, the digital equivalent of its national currency, and is planning to release it soon. The Bahamas Sand Dollar is a digital iteration of the country's national currency. It was released on October 2020 according to a February 2021 survey conducted by the International Monetary Fund. Around 111 countries from its 159 member countries are researching or planning to introduce digital money in the near future. What problem does digital money solve? Several systems already perform transactions with digital versions of money. For example, credit card systems allow users to purchase goods and services on credit. Wire transfer systems enable movement of cash across borders. Such transactions are expensive and time-consuming because they involve use of disparate processing systems. The SWIFT system, a payment system network consisting of various banks and financial institutions across the globe. It is an example of such an outfit. There are charges for each transfer conducted through the SWIFT network. The member institutions of SWIFT also function in a patchwork of regulations, each specific to a different financial jurisdiction. Moreover, these systems are built to the promise of future payments, ensuring a time lag for each transaction. For example, reconciliation for credit cards occurs at a later date, and users can file chargebacks and transactions. One of the aims of digital money is to do away with the time lag and operating costs for such transactions by using distributed ledger technology DLT. In a DLT system, nodes or shared ledgers cannot connect to form a common network to process transactions. This network can also extend to other jurisdictions and authorities and stakeholders, improving the resiliency of a financial network by eliminating the need for a centralized database of records. Digital money also solves the double spending problem by using an algorithmic conscience system. The problem stated quite simply relates to ensuring that a note of digital money is not twice by the same person. A centralized setup of currency production and distribution, such as the one with central banks that exists currently, uses a system of some forms of digital money like central bank digital currencies or digital money issued by private parties replicate. The role of a central authority is ensuring solvency and integrity of transactions, albeit in a digital context. Other types of digital monies are decentralized. They eliminate the function of central authorities to oversee production and intermediaries needed to distribute the currency. Cryptography is used. Blind signatures hide the identity of transaction parties. The zero knowledge proofs encrypt transaction details. Examples of this type of digital money are cryptocurrencies like Bitcoin and Ethereum. Thanks to its technology underpinning digital money that can be adapted to a suit multiple purposes can take on various forms. The three adaptations of digital money that have emerged in recent times are as follows. Central bank digital currencies are issued by the central bank of a country. They are separate from fiat currencies, which are also backed by the authority and credit of a central bank and another obligation of the institution. CBDCs is monetary policy implementation by removing intermediaries from the policy by establishing a direct connection between the government and the average citizen. Banks and financial institutions responsible for distributing national currency are no longer required in the process. Depending on their use and two types of CBDCs. Retail CBDCs are designed to be used for daily transactions, much like fiat currencies, in more limited implementation of concept. Wholesale CBDCs are used for transactions conducted between banks and financial institutions. Cryptocurrencies are digital currencies designed using cryptography. The crypto wrapper around the digital currency also provides enhanced security and makes transaction tamper-resistant. The most popular cryptocurrencies are Bitcoin and Ethereum. Since 2017, the popularity of cryptocurrencies as an investment class has skyrocketed their value and the overall market capitalization of crypto markets. By July 2021, the market cap of cryptocurrencies has surpassed $2 trillion. Stablecoins. Stablecoins are a variation of cryptocurrencies and were developed to counter the price volatility of regular cryptocurrencies. Stablecoins can be likened to a form of private money whose price is tied to that of a fiat currency or a basket of goods to ensure that they remain stable. They can be a proxy or a fiat currencies except they are not backed by a government authority. The market for stablecoins has exploded in recent times. As of February 2021, 200 stablecoins has been released or were in development. Advantages of digital currency / money. The current financial infrastructure is a complex system of many entities conducting a transaction between financial institutions, taking time and money because they work in different technological systems and regulation regimes. The main advantages of digital money is that it speeds up transaction speed and cuts back on costs. So this is it for today, guys, about digital money.